Property prices in the last 12 months in Brisbane, Perth and Darwin have gone absolutely ballistic as expected. With prices in Brisbane being up 17% in the last year, prices in Perth being up 22% and prices in Darwin being up just over 19%. We've seen the price of silver and Bitcoin fluctuating like absolute crazy right now. And for the first time in a while, we've seen interest rates move up again. Now, for some investors, this might feel a little bit scary and a little bit uncomfortable. But for people like you and I who are following this information on a monthly basis, this is an incredible opportunity. And after spending over 200 hours recently looking at the largest 20 markets in the country, I believe most of Australia is completely missing the biggest opportunity in the Australian property market right now. Now, when we look at the annual capital growth rates across the country over the last 12 months, every capital city in the nation has been going up in value. But the standout performers are still those second tier cities, the likes of Brisbane, Perth, Adelaide and Darwin. Now, the reason for this is when you look at a 20-year data set, what happened between about 2011 or 2012 after the last GFC to about 2020 is that house prices in the best locations around Sydney and Melbourne went absolutely ballistic. Now, as we know, there's a whole lot of levers that drive the Australian property market, including interest rates, affordability, supply and demand, as well as infrastructure and jobs, as well as incomes. But in reality, Sydney and Melbourne got to a point just before COVID where they were so expensive and so hard for the average Australian to live in. And so what happened is people were driven out of those two markets into the Adelaides, the Brisbanes, the Gold Coast, the Sunny Coast, as well as the Perths, for affordability and for lifestyle. So what we've seen between 2020 and 2026 is people moving out of the Sydney and the Melbourne markets to chase the more affordable markets around the country. Now, this is a trend that we've been seeing in Australia for the last 100 years, where people seek affordability and lifestyle across the country. And what we're seeing right now is the prices in those markets going up so rapidly that they are now becoming the more expensive and more unaffordable markets around the nation. Now, when we start to look at vacancy rates across the country, obviously there has been about 500,000 people moving into Australia each year for the last couple of years, according to the Australian Bureau of Statistics. Now, the majority of these people have been landing in Melbourne, with 160,000 people a year moving into Victoria. About 100,000 of them have been coming into southeast Queensland or broader Queensland, and a bunch of them going into Sydney. Now, because the price of building went up so much post-COVID, there hasn't been as many new homes constructed across the country, and that's why we're seeing such chronically undersupplied vacancy rates across every capital city in Australia right now. Now, historically, anything below 2% would be chronically undersupplied, but as you can see, Brisbane, Perth, Adelaide, Hobart and Darwin are sitting well below the 1% mark right now, which means it's chronically undersupplied. Now, this has an effect in two ways on the market based on history. One is property prices generally go up in those markets that are that undersupplied, and rents also lift off the bottom as well. Now, when we take a quick look at auction clearance rates across the country over the last month, they are picking up slightly in Brisbane and Perth at the moment. I don't think it's really a good indicator personally in terms of how hot a market is, unless we're looking at Melbourne and Sydney. Now, one of my favorite things to take a quick look at each month is the ANZ Roy Morgan report, where we look at consumer confidence across the country. Now, in Australia right now, not only do we have heaps of people moving here, record levels of infrastructure, a massive undersupply of housing, very low interest rates based on history, and people earning more than they've ever earned in their lives. But we also have one of the hottest markets in the last century in the country right now, with so many capital cities and regional markets absolutely kicking ass today. But as always, like good Aussies, we are feeling more and more pessimistic than ever before. But even though over the last month, many things across the country are looking better, we're feeling worse. And that was before this even happened. Now, when we look at unemployment rates as well as lending rates over the last month, not too much to talk about here. Unemployment is still extremely low, sitting at 4.1%, well below the long-term historical average. And lending rates have changed slightly, with owner-occupiers taking about 60% of the new mortgages, as well as investors picking up the other 40%. Now, at the start of the video, I talked about a 200-hour piece of work that I've just finished with my colleague here, Tim. Now, what I did is I looked at every single state in Australia, every single capital city, as well as every major regional market around the country. And what I did was look at the performance of each of those markets for the last 1 year, 3, 5, 7, 10, and 18 years. On top of this, where I could, I went and looked at each of those markets over the last 30 years as well. Now, what I found was super interesting. In that 30-year period between 1992 and 2022, the top performing market in the country was Melbourne, having done 519% growth. Now, the next best performing market was Sydney, having done over 507%, followed by the other capital cities in descending order, with Darwin doing the worst. Now, that was all well and good to go, okay, Australian property has absolutely smashed it in the last 30 years, and that's why all of our parents and grandparents that bought houses or investments are in such good financial positions today. The other big thing that I found, which was super interesting, is every capital city on the east coast of Australia, or the major regional markets over here on the east coast of Australia, for example, Sunny Coast, Goldie in Queensland, Central Coast, Newcastle, Wollongong in New South Wales, Geelong, Bendigo, Ballarat, and the Mornington Peninsula in Melbourne, have done extremely well in the last 18 years. In fact, I couldn't find one of these markets in the last 18 years that did less than 219%, with the top performing market being Geelong, doing over 271% over that period of time. Now, why this is so important for you guys, especially when Australians are feeling very, very average about property and investing right now, is to just have confidence in the history that Australian property has worked out. There will be times where we go through things like the GFC again, or COVID, or the Great Depression. There will be times when house prices in certain markets come down by as much as 25% in one given year. But despite all of these bumps and bruises that investors have had to go through in the last 18 or 30 or 100 years in the country, property on the east coast of Australia has absolutely killed it longer term. But the biggest finding for me, having looked in this data, was the 7-year data set. So it's extremely easy for you to jump onto Google anytime for free and type in, for example, Manly Beach, Sydney plus 1-year growth rate, or Manly Beach, Sydney 10-year growth rate. And it's really easy to see how it's done recently and how it's done longer term. But what's much harder to find is the 7-year data sets, and this is where the secret sauce is. When I looked at the 7-year data set across the 20 largest markets in the country, I found Perth, Adelaide, and Brisbane have all almost done 100+% in the last 7 years. But over the same period of time, a market like Darwin, for example, only did 33%. So that means in the last 7 years, Darwin did 67% less growth than Perth, Adelaide, or Brisbane in the same period of time. What's even more crazy is that Melbourne in the last 7 years did an average of 25%, Geelong did 31%, as well as the Mornington Peninsula doing 31%. Now, this is your key advantage as an investor in 2026, not following the crowd into the tops of those markets that have absolutely cranked recently, but investing against the trend and choosing those markets like Melbourne, Mornington Peninsula, Geelong, Bendigo, Ballarat, and Darwin that have underperformed massively recently. So I know I've gone extremely deep into this market update, but I really want you to have a clear roadmap running into the next 7 years, because the markets that we all know and love in the last 5 to 7 years in the country that have already cranked in value are not going to be the ones 7 years from today that we wish we invested in 2026. Now, for those of you like me who are thinking about buying 1 or 2 properties in the next 3 to 12 months, then I'd love to offer you a one-on-one strategy session. Simply jump over to www.pumpedonproperty.com, click that free strategy session button, and we can talk about exactly where you are right now, where you'd like to be longer term. We can educate you on the largest 20 markets in the country, and you can take that information with a grain of salt and go and absolutely smash it on your own, or potentially become one of the extremely small number of clients that we take on each week. But either way, I truly wish you all the best on your journey to a life of financial freedom and choices through property.